Polymarket has launched a new category of prediction markets focused on private companies, including Anthropic and OpenAI. This marks the first time the platform has expanded into trading outcomes tied to firms that are not publicly listed. Traditionally, Polymarket has offered markets on public events, elections, and crypto-native topics. Now, it's introducing contracts that allow participants to trade on developments related to private technology firms. This shift opens a new frontier in prediction markets, one that connects speculative trading with the growth narratives of companies that are shaping the artificial intelligence landscape. The inclusion of Anthropic and OpenAI is significant because both are central to the current AI revolution. They have attracted substantial venture capital funding and media attention in recent years. By bringing them into the prediction market framework, Polymarket is tapping into a growing interest in AI industry outcomes. This could include everything from new product launches to major funding rounds or valuation milestones. The move aligns with broader trends in the crypto space, where platforms are increasingly exploring ways to bridge traditional business narratives with decentralized financial tools. Prediction markets on private companies represent a novel mechanism for assessing business performance and market sentiment before public listing. Unlike stock markets, which are driven by institutional and retail trading, prediction markets aggregate a diverse set of opinions and expectations into quantifiable outcomes. This could provide early signals about a company's trajectory, especially in fast-moving sectors like artificial intelligence. For Polymarket, the addition of private firm markets broadens its appeal beyond. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The crypto-native audience and into the wider tech and business communities. The decision to include Anthropic and OpenAI reflects the platform's recognition of the AI sector's growing influence. These companies are not just technological innovators, but also key players in shaping regulatory and ethical discussions around AI development. Their inclusion in prediction markets could allow traders and investors to hedge or speculate on a range of outcomes, from regulatory changes to product adoption rates. This is particularly relevant in an industry where uncertainty and rapid change are the norm. From a market design perspective, the introduction of private company markets is a test of how well prediction markets can adapt to non-crypto native assets. While the mechanics of trading remain similar, buying contracts that pay out based on event outcomes, the subject matter is new territory. This could lead to new types of contracts, such as those tied to specific funding rounds or strategic partnerships. It also raises questions about how market participants will interpret and value outcomes in a sector where traditional financial metrics may not apply. The broader implications of this expansion are still emerging. If successful, it could pave the way for prediction markets on a wider range of private companies, including those in healthcare, energy, and consumer tech. It also reinforces the trend of crypto platforms experimenting with traditional financial tools in new ways. For example, similar to how Bitget Wallet has explored tokenized equities, Polymarket is now offering a speculative layer on private firm outcomes. The overlap between AI and crypto is a key driver of this development. Both sectors are characterized by rapid innovation, speculative investment, and a high degree of uncertainty. Prediction markets offer a structured way to navigate that uncertainty by aggregating diverse perspectives into market prices. This is particularly valuable in AI, where the pace of change can make traditional valuation models less effective. The next signal to watch is how these new markets perform in terms of liquidity and user engagement. Early signs suggest strong interest, given the prominence of Anthropic and OpenAI in the tech sector. If the markets attract consistent participation, it could signal growing demand for speculative tools that track private company outcomes. Conversely, if participation is limited, it may indicate that the market is still testing the. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Viability of this new category. The inclusion of private companies in prediction markets also raises questions about regulatory boundaries. While prediction markets are typically focused on non-financial events, the line between speculative trading and traditional investing is increasingly blurred. As platforms like Polymarket expand into new asset classes, they may face increased scrutiny from regulators who are still defining the rules around digital financial products. Ultimately, this expansion represents a significant step forward for prediction markets. By moving beyond crypto and public events into the private technology sector, Polymarket is demonstrating the platform's versatility and adaptability. The success of this experiment could influence how other platforms approach market design, potentially leading to a broader adoption of prediction markets as a tool for assessing business and technological trends.